Good morning and welcome to Business Buzz. Coming up, Nigerian stocks traded softer on Wednesday as the all-share index shed over 1,000 points. The naira holds firm for a second straight week, defying a rising United States dollar. Nigeria's crypto economy grows too big for the government to ignore, drawing new rules and taxes. Nigeria's insurers race against the clock to beat today's recapitalization deadline. And Brent crude falls more than 5% as the United States and Iran pause hostilities. I am Louisa Asidi. Stay with us. Welcome back. We begin this morning with agriculture and a major push to lift Nigeria's farm outputs. The federal government has received the final report for Agro, a $500 million program backed by the World Bank. 71% of the funding will flow through participating states, with agriculture making up 23% of national output and 34% of jobs. Officials say higher yields are key to easing food prices, but they also say that the money falls far short of what the sector truly needs. Now, that $500 million program raises a bigger question, one that has troubled policymakers for decades. Why, in a country where a third of the workforce farms the land, agriculture still struggles to feed the nation, let alone drive it? To unpack that, we spoke to Lucky Enakiriri, who is a financial analyst and the former Dean of Student Affairs at Dennis Osadebe University. Let's take a look. Okay, before we go to the interview, let's talk more on what we have here for Business Buzz. Now to the markets where Nigerian stocks traded softer on Wednesday. The all-share index on the Nigerian exchange shed 1,004.38 points on Wednesday, a decline of 0.41% to close at 246,980.17. Market capitalization fell by 648 billion naira, ending the day at 159.34 trillion naira. Also, the losers outnumbered the gainers, with 46 stocks down against 23 up and 77 closing unchanged. Lasaco led the gainers, rising the maximum 10% to 2 naira 42 kobo, with CNIF and NEM close behind, each up by close to 10%. Meanwhile, on the losing side, Cornerstone led the fallers down the full 10% to 5 naira 40 kobo. It was a softer session as sellers outnumbered buyers across the board. Moving on to the currency market, where the naira has held firm despite renewed strength in the United States dollar. The local currency closed on Friday at 1,362 naira to the dollar at the official window, a gain of just over 1% on the week. The resilience is being driven by a sharp rise in market liquidity, with weekly turnover more than doubling and external reserves holding above $52 billion, enough to cover roughly 11 months of imports. Analysts say sustained reserves growth and disciplined policy will be critical to keeping the naira stable in the months ahead. Now to Nigeria's fast-growing crypto economy, which has become too large for the authorities to overlook. The country recorded $92.7 billion in on-chain transactions over the past year, remaining by a wide margin in the largest crypto market in sub-Saharan Africa, according to data from chain analysts. An estimated 26 million Nigerians, close to a quarter of all adults, now hold or trade digitally assets regularly, driven mainly by dollar-pegged stablecoins used to guard savings against inflation. In light of this, President Tinubu signed an executive order which created a central bank and taxation. Moving on to the downstream sector, the Dangote refinery says it reverted to selling petrol in naira because importers were holding back stock in anticipation of higher prices. A company official said the decision was taken to prevent scarcity after a brief switch to dollar sales unsettled the market. The refinery's gantry price now stands at 1,215 naira per litre, with pump prices reaching about 1,300 naira. Talks with the federal government over crude supply under the Naira for Crude arrangement are said to be continuing. It's time now for a break. More business buzz when we return.
The Delta State government invites business leaders, global investors, policymakers, and industry captains to the Delta State Economic and Investment Summit 2026, themed Harnessing Our Strengths and Unlocking Our Potentials. Chief guest of honor, the Vice President of the Federal Republic of Nigeria, Senator Kashim Shettima, GCON. Keynote speaker, Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala, GCON. Guest speaker, renowned scholar, Professor Patrick Lumumba. Chairman of the occasion, Engineer Austin Avuru. Other distinguished local and international participants will also be in attendance. Date, August 3 to 5, 2026. Time, 10 a.m. daily. Venue, Dome Event Center, Asaba. Chief host, His Excellency, Right Honorable Sheriff Obrewori, Governor, Delta State. Announcer, Dr. Kingsley Emu, Secretary to Delta State Government and Chairman Planning Committee.
Welcome back. Now, back to the interview with Lucky Enakiriri, who is a financial analyst and the former Dean of Student Affairs at Dennis Osabide University on the agricultural sector. Let's take a look at it. Okay, so I have a couple of questions for you when you look at the Nigerian agricultural industry. Now, let's start with something very simple. What do you think is the single biggest thing that is wrong with the agriculture industry in Nigeria? Is it policy? Is it financing? Or what is actually in the farm on the ground?
I do not think that there is a single biggest problem that is wrong with Nigeria agricultural industry.
Okay.
Rather, it's a compounded issue made up of both policies, both financing, and even the agriculture itself, the attitude to agriculture itself. So it's made up of various components, not a single one. If we look at a single one in isolation, we'll be addressing the wound on the surface. But the problem with Nigeria agriculture is much, and it's made up of various factors that put themselves together to generate such problem.
Okay, now in Nigeria, we're seeing billions of loans, grants, and special programs poured into agriculture over the years, but yields are low and food prices keep rising. Now, from your own point of view, where do you think this money actually goes, and why is it not translating into higher productivity for farms?
Okay, that's why I began by saying that I don't think there is a single problem that is wrong with the Nigeria agricultural industry. Let me put it squarely. One, the attitude of the government to the issues of agriculture in Nigeria is a big problem on issue. For example, let me put the recent one, the Borrowers Anchors Program, which was anchored by the CBN during the time of President Muhammadu Buhari. And as soon as the present administration came on board, they did away with it. In the name of we want to restructure, we want to look at certain things, we want to look at what they are doing, what they have cultural industry over the years from 1960 when we gain our independence till now. It has been one inconsistent policy or the other. And now coming back to your question, when you see this, you discover that that very program, it did give a lot of money out to farmers to execute agricultural product. And as at the last time, I know that the CBN reported about over 1 trillion naira are still outside. What happened to this money that have not been paid? Number one, they said some of the persons that these things have been advanced to, they sold their equipment, they went away with it. That is attitude issue. And then you look at, again, how did this equipment get to them? What were the costs? Was it the actual cost, or were they built in variable within, which in Nigeria is captured as a big C, corruption? So these are some of the things that you have to look at. And that is the reason it's not yielding the expected results. And then you look at the interest rate. First, it started with 9%. That was already high enough. And then it increased to 15%. How many farm produce are we supposed to generate to be able to pay off all of that, plus the attitude of Nigeria? So that's why it's not yielding a much needed result as we intended.
Oh, that's wonderful. Now, over 80% of Nigerian families are smallholders, often working in tiny plots with basic farm tools. Now, what does a typical smallholder's balance sheet look like today in terms of costs, access to credit, and income? And how does that shape the wider crisis in the agricultural sector?
In fact, the biggest crisis we have in Nigeria agricultural sector, one of the biggest one, is our inability to transit from the small-scale farming to a sustainable large-scale farming.
Okay.
You ask, how does the balance sheet look like? For a small-scale farmer, he's only interested in what he can eat and maybe a little to generate income for his family or her family. Not yet. Every other thing. And again, when this small-scale farmer and they produce products, what happened to them? We have after harvest spoilage. That wood creeping. So the government is not doing anything about that because we need to have a model wherein the products, after being harvested, they are kept safe or they are processed into other products. Then the farmers are guaranteed that this, whatever I am going to do, is not going to be a waste. And that is actually affecting the economy as we have it today. People farm on a small scale, and then at the end of the day, the product could even get destroyed because there is nobody to take it off from them. So it's a big issue as far as we have the situation in Nigeria.
Okay. Successive governments announce bold agricultural projects and policies and interventions, but the story on the farm looks a little bit, or I would say a lot different. Now, what do you think are the key disconnects between agricultural policy designs around the states and the implementation at the community and the farm levels?
See, in 1960, when Nigeria gained independence, agriculture was the mainstream of the economy. From 1960 to 1969, we have agriculture sustaining the economy. So you have the groundnut pyramid in the north, the cocoa house in the west. And then we progressed in that very cultural product dropped. So we have basic problems in our hands. If I get your question correctly, you talked about the question you asked.
Yes, I talked about the key disconnects between...
The key disconnect,
yes.
Very good. Now, we have this issue coming in. From 1970, the government began to neglect agriculture. Then 1980-something, they came in and said, okay, let us have these sustainable agricultural policies. So you have things like Operation Feed the Nation and all the other. There have been successive good policies of government from 1980 something till date. But there is a big disconnect between the government policies and the ordinary farmer. How? The government is employing top-bottom approach.
Okay, what do you mean by that?
Good. The people at the top, they formulate the policy. They even have access to the fund. And then they try to disseminate to the farmer. The farmers are not involved in the core policies of government. How this should be drafted, how it should be implemented. You can't know something more than the person that is involved in the production of these products. Then we have the big other factor, which is corruption. Before it cascades down to the farmer, much of these policies have been done away. Sometimes those who want to come to the farmer with seedlings, they come late, or they don't even come at all. But we hear that these whole things have been disbursed. But at the local level, it's not there. So that big disconnect is there because we are adopting the top-bottom approach instead of taking it from the bottom up. If we allow the farmers' participation fully in government policies, government programs, these are the people who know themselves. You can't know the local more than the locals. They know themselves and they participate fully and they are fully involved. You should be able to utilize the fund, the resources, and the policies effectively to generate products for the economy, generate income for the nation, and improve the GDP.
Okay. Now, when you look at the angle of entrepreneurship, what do you think it would take to truly shift farming from a sustenance activity to a more viable business in Nigeria when you look at the market value, value chains, and support for agro entrepreneurs?
There's basically farming all over the world no longer rely on crude instruments like we have it in Nigeria. We need to shift ourselves from the crude implements being used to technology, tractors, mechanized farming. And then when these products have been produced in a large scale, we need to have a program to take these products from the market, from the farmers, and then cascade them to the market place.
Marketplace, yes.
Have them processed and have them stored properly. If we can do that, we can move that. The use of technology cannot be ruled out. We have to, and we must make use of it. And then government too must come in. For example, in the US, if we look at the, if anything happens, I'm at loss. It wouldn't exist because the government have a program. Either the farm is insured or they guarantee prices. They even have a program to the extent that if there are losses during the year, the government can compensate the farmers. So this motivates people to produce. And there are big companies which are ready to take up these products immediately they are produced. So the farmers are not at loss.
Okay.
So we need to employ these things. We need to bring in technology. We need to bring in the policies. We need to bring government programs that will help to obtain these products from the farm, process them, store them for future use. That way, we'll make agriculture viable. And if we introduce mechanized method of agriculture, the youth will be interested to be able to go into farming. Apart from feeding themselves, they make a lot of money.
Okay, now, presently, food still rots on farmlands because of so many issues. You have the issues of bad roads, unreliable power, and weak storage. Now, how much of Nigeria's agricultural underperformance is simply an infrastructural and value chain problem? And what practical steps can the state governments take to fix all that?
Now, I said before that we have a problem, post-harvest storage problem.
Yes.
The farmer harvests their products, they get spoiled. We can do a lot.
Okay.
We can do a lot. How? When this farm, of course, we have bad roads.
Yes.
So to get these products to where they can be purchased or used is another issue of its own in Nigeria. But government can come in with
Okay.
programs to say, look, whatever you produced will be purchased. And all the farmers need to do is get this product from the farm, get them to where they need these things to exist, and they take it from them, pay them their full value. The farmer is happy, he goes back. And then the government takes off from there. And we can partner with agencies, international organizations, companies to get this done. Nigeria is a very funny place where we have a lot of raw materials, and then at the end of the day, we still import them for usage.
Yes.
So we can do a lot. We really need a sustainable program that is aimed at saying that, look, these products should not be damaged. They should not be spoiled due to probably bad roads from them. From there, we can make a lot from it. I have a friend the other time who said he wanted to come to Nigeria to do something about tomatoes processing. You see, during the tomato season, you have a lot of tomatoes being damaged. This can be processed into something else.
Yes. Now, looking at the access to land, insecurity in farming communities, and climate shocks like flooding, these all raise the risk for farmers and investors. Now, how do those risks distort the financing decisions, and what kind of incentive structure would actually crowd in private capital at a large scale?
Every finance person, when giving out money, looks at the risk. Where you have insecurity, which is a big problem in Nigeria, where you have the risk of flooding, all of these things can contribute to higher cost of what? Capital. The finance expert, the banks, the lending houses would look at these risks before lending to farmers. But what do we do? Because if these things happen, it simply means that the farmer cannot pay back its loan. What do we do to ensure that these risks are a bit minimized? You cannot eliminate risk in any economy or any endeavor, but you can minimize it.
Yes.
What do we do? It's simple. I said before, in the US, for example, we have what is called insurance for farm products. We have what is called price guarantee. We have what is called farmers compensation. Insurance simply means that if your products are damaged for whatever reason, companies will come in, or the products are already insured, so they come in and they pay the value for it. And you ask me, who pays the premium? The government pays a large chunk of the premium.
Okay.
That's the reason. You see, when we talk of, sometimes they say a petrol subsidy. You can leave petrol and subsidize farming.
That's a good point.
And then we also have what is called price guarantee. During the time where you have excess harvest. Now, I've addressed the problem of if there is a spoilage, that insurance can take care of them. Now, during the time where you have excess harvest, prices will tend to what? Drop. There is what we call price guarantee, which means whether there is excess or not, the government pays that barest minimum to farmers. They don't lose. And then we have compensation where there are what? Damages. I think the last time I checked, if you have that as a farmer, why won't you go to your farm?
Exactly. You'd want to go to the farm, yes, to produce things. Now, there's something that has been a popular thing for the agricultural industry. Many farmers still rely on local tools, outdated manual tools. That's what they rely on. And now, how big is the skills and technology gap in Nigerian agriculture? And what concrete changes from extensive services to mechanization would move the needle most? Meaning, would move the farmers from using outdated or manual tools to more modern tools, I would say.
The gap is very wide. Most Nigerian farmers are subsistence in nature, using crude instrument like the cutlass, the hoe, and all the other. What can we do because we need to mechanize our farming. We can't remain with the way we were in 1960. You know, there are problems facing us. The fact that, one, we are not dealing with mechanized farming. Two, the youth are out of the villages, so we have the old people farming anyway. And even if you have to come with machines, equipment right now, they can't make use of it. But what do we do to deal with this problem? Because you cannot produce a large scale with that kind of approach. And even if you have to go into commercial farming with steel hands or crude implements, you are not going to make the needed effect. The government can introduce a subsidized program by importing, because we don't have them produced in Nigeria, we can import machinery. The money we use in importing all manner of things, we can increase tariff on those ones and lower tariff on machinery, instruments, which can be brought into the country. And then, like the Borrowers and Cost Program, the government too can have these things given to the farmer, but they must involve the farmers who are the ones to make use of it, not the top to bottom approach like I mentioned earlier. When you give it to them, they should be able to pay back little by little when they make use of these things. That's the thing we can do to mechanize Nigeria farming situation, because until we do that, we will remain where we are as a nation.
Okay, now we've had flagship schemes like the Anchor Borrower type program, which you have been talking about, and now we have a new $500 million initiative. Now, what kind of transparency and accountability systems are missing today, and how should we measure success so these interventions do not become another waste or another drain in the system?
Nigeria is not bereaved of policies. Nigeria has a big problem. C, corruption. When you say accountability, accountability means fund entrusted to someone who utilizes it effectively and report on how he utilizes it. We have a program in this country which says conditional cash transfer to the poor of the poorest or the poorest of the poor. How many poorest of the poor in your village have you seen receiving that money?
True.
And you see, when we deal with these things, we always go back to the government who is in charge. But to be accountable, we must learn to kill corruption. We must learn to hold the people accountable. Those we put in charge accountable. And it is the man in charge that will be able to do that.
Yes, yes.
So if we don't eliminate corruption, this will just be like the programs that we've had over the years. From 1960 something, we had all of the programs. Up to 1980s, up to now, we are not bereaved. And even currently, we have a lot of programs. But how will it get to the common farmer? What is that accountability in the middle? What is that transparency in the middle? Not saying there is one person at the top there who is in charge of this program, cascade it down and just give anything in which, or he or she wishes to whoever is this. No. We will have a situation the other time where people who have never been to farm before have to form cooperative society just to access funds, just to access instruments, just to access machines. And at the end of the day, when they access them, they sold them off. That's why we say the farmers must be involved. The farmers must be involved. In every community, the farmers know themselves. Yes. In every state, the farmers know themselves.
Yes, yes, exactly. Now, if you had to give one or two decisive actions that the federal and state governments must take in the next 12 to 24 months to turn Nigeria's agricultural system around to feed the country and make farming profitable, what would they be?
I would say that the government should give serious incentives to the youth to engage in mechanized farming. We have a lot of agricultural graduates today, and they leave the university, they go and seek jobs in the bank. What happens to the training? So give incentives. provide the enabling environment. It may interest you to know that in Nigeria today, we have up to close to 90 million hectares of land, and less than 50% is under cultivation. We can give that incentive. We can provide all the necessary tools that are needed, and we should be able to make agriculture great for our country. Because a nation that cannot feed itself is at war. A nation that cannot feed itself is a crisis. We must not forget that.
Yes. Now, looking at the numbers, how sustainable is the current model where the government keeps subsidizing inputs and programs? And at what point do we have to confront the hard truth about the agricultural sector's financial feasibility?
The point we have to confront the hard truth is now. We need to tell ourselves the truth. Now, I don't know what we are subsidizing. I'll be honest and frank. I don't know what we are subsidizing. The things that we are subsidizing today, are they extremely cheap compared to the open market?
Okay. Now, looking at agriculture in general, where do you see the most promising opportunities in agri-business today? Is it in the processing department, the logistics, the exports, or digital platforms? And is it holding young people back? What is actually holding them back from entering into the agricultural space?
The problems of the agricultural industry. For me, if I know that when I step into the agricultural industry, one, I will have access to finance to be able to do everything I want to do at a very cheap cost. Two, whatever products that I produce will be taken from me. That means I will sell everything. Three, I have access to the necessary equipment that I need. I will run to agriculture.
Okay. Okay. Now, I have, I think, a question that I would say is directed towards the youth, young graduates, and people in school choose to see agriculture as a serious career path. And what do you think must change in terms of training, perspective, and policy to make the agricultural industry more attractive?
We have the necessary manpower to deal with the agricultural industry or deal with agriculture in Nigeria. What we lack is the necessary incentives for the youth to engage in agriculture. Nigeria agricultural problems started strongly from 1970 when the government shifted its focus from food production to oil. All the young people ran away from the villages to the city to seek oil job. The products of agriculture became something else, and that is how we resorted ourselves into net importers of agricultural products. If we provide the necessary incentive, the youth will return to agriculture. And when I talk of the necessary incentive, I'm talking of both finance, both processing of the products after harvest, transportation of the products from the farm to wherever they should be able to sell them, and then of taking them from the farmers, processing these things, the people will return to the farm. Until we put all of these things in perspective, farming will continue to be a problem in Nigeria. And feeding ourselves will continue to be a problem. Then importation will continue to grow.
Okay.
When Nigeria decided that enough is enough, let's confront the issues of rice. They encourage rice production. Set up all of these factories here and there, so whoever produces rice have a place they can mill them, convert them to whatever, and then they are sold. We went from importation of about 600,000 tons of rice to producers of 7.9 million tons of rice annually. And today, before now, we talk about foreign rice. But today, everyone is talking of Nigerian-made rice. We can do that. We can replicate that in every other sector.
Yes, exactly.
Not focusing on just one thing. I think oil is our problem because we just see the oil money is very cheap. It's very easy to come by, so we are there.
Oh, thank you so much for that. So, thank you, Dr. Lucky Enakeri, for your wonderful time today. And I would love to have you soon, anytime else.
Thank you very much. And it's nice having my time, spending my time with Dott TV. I'm sure that this television station is going to grow exponentially and it's going to make waves in Delta State and
Okay.
even in Nigeria.
Oh, thank you so much, sir, for that. Thank you.
You're welcome.
That was Lucky Enakiriri, a financial analyst and the former Dean of Student Affairs at Dennis Otabede University on the Nigerian agricultural sector. We'll take a short break. When we return, more business buzz. Welcome back. Now on to the financial sector, where Nigerians' insurance are racing against the clock ahead of today's recapitalization deadline. Industry sources estimate underwriters have collectively raised close to 300 billion naira with capital verification completed for about 50 of the world's 58 companies. Firms that fall short face the prospect of mergers, acquisitions, or direct regulatory intervention once the deadline passes. The exercise is expected to reshape the industry with stronger balance sheets intended to mean faster claim settlement and greater local risk retention. Now to a stock warning on the cost of doing business in Nigeria. The National Sugar Development Council says manufacturers pay between 2 to 10 times more than rivals in Vietnam and China for power their own electricity, while working capital can cost as much as 35% against single digits in Asia. The council is calling for dedicated industrial power in every state within 12 months, warning that Nigeria must compete or concede the African market. There's better news on energy self-sufficiency as Nigeria records no import of aviation fuel for 13 consecutive months, with domestic refineries supplying the entire market. The sheet reduces airlines' exposure to foreign exchange volatility and conserves scarce dollars once spent on imported fuel. Supply, however, remains uneven month to month, and analysts say stability will matter as much as outputs. We'll go on another break. When we return, good news in the corporate sector. Welcome back. To corporate news now and the landmark set of results from champion breweries. The Uyo-based brewery reported first-half revenue of more than 35 billion naira, up 124% following its acquisition of the Bullet energy drink portfolio. The deal transforms Champion into a pan-African beverage company with euro-dominated earnings across 14 markets, softening its exposure to naira weakness. Management expects the second half of the year to show the acquisition's full earnings potential. Staying with corporate Africa, South Africa's Vodacom is ending its era as one of the continent's most generous dividend payers. The telecoms group has cut its minimum payout to 65% of headline earnings, retaining cash to fund expansion after raising its stake in Kenya's Safaricom to 55%. It has lifted its long-term revenue ambition to more than 300 billion rand, with financial services set to provide over a fifth of group revenue. This is a signal that Africa's telecoms giants are betting their future on fintech, fiber, and digital services. Now to the global oil market, where Brent crude fell more than 5% to just under $92 a barrel. The decline follows a weekend pause in attacks between the United States and Iran, raising hopes that diplomacy could reopen shipping through the Strait of Hormuz. Prices had surged to $100 a barrel last week as the conflict disrupted one of the world's most important energy corridors. Shipping through the strait remains well below normal, and for an oil exporter like Nigeria, swing cuts both ways: higher revenues, but also costlier imported fuel. We'll go on another break, and when we return, news from the global markets. Welcome back. Now to Shanghai, where China's largest memory chip maker has made a spectacular market debut. Shares in Changqi Memory Technologies, known as CXMT, soared as much as 470% on their first day of trading after the company raised about $8.6 billion, Asia's biggest public offering this year. This is now the fourth largest maker of the memory chips used in phones, computers, and servers, behind Samsung, SK Hynix, and Micron. This scale of demand reflects a global scramble for chips to power artificial intelligence and a determined push by Beijing towards technology self-sufficiency. Staying with technology and mounting unease over the artificial intelligence boom. NVIDIA, the world's most valuable company, is said to be working on a fresh round of infrastructure deals potentially worth more than $750 billion, including a $500 billion tie-up linked to SK Hynix and a possible guarantee of up to $250 billion to support OpenAI. The company is also investing $1 billion in so-called secular financing, where a chip maker funds the very customers who then buy its chips, a pattern some fear is inflating demand and valuations across the sector. Now to South Korea, where Samsung Electronics has secured a major long-term contract. The company has struck a partnership with the American chip designer Broadcom, projected to exceed $200 billion through 2030, spanning memory, contract manufacturing, and advanced packaging. This means that Broadcom's next-generation chips will be built using Samsung's most advanced production technology. The deal is a significant boost to Samsung's foundry business as it works to close the gap with the industry leader, Taiwan's TSMC. We'll go on one more break. More global news still ahead.
The Delta State government invites business leaders, global investors, policymakers, and industry captains to the Delta State Economic and Investment Summit 2026, themed Harnessing Our Strengths and Unlocking Our Potentials. Chief guest of honor, the Vice President of the Federal Republic of Nigeria, Senator Kashim Shettima, GCON. Keynote speaker, Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala, GCON. Guest speaker, renowned scholar, Professor Patrick Lumumba. Chairman of the occasion, Engineer Austin Avuru. Other distinguished local and international participants will also be in attendance. Date, August 3 to 5, 2026. Time, 10 a.m. daily. Venue, Dome Event Center, Asaba. Chief host, His Excellency, Right Honorable Sheriff Obrewori, Governor, Delta State. Announcer, Dr. Kingsley Emu, Secretary to Delta State Government and Chairman Planning Committee.
Welcome back. Now to a test of America's industrial ambitions. President Trump's drive to end United States reliance on Chinese critical minerals is running its and related metals from China, Russia, Iran, or North Korea. But American miners and processors are not yet ready, and Washington may be forced to keep allowing Chinese supplies in the meantime. China controls roughly 90% of global rare earth refining, leverage that continues to shape the technology and defense supply chains the whole world depends on. And finally to Hong Kong, where the fast fashion giant Shein faces a spectacle reception. The company is seeking a valuation of between $40 and $50 billion in its planned listing, less than half the 100 to nearly $42 billion. But with net income falling 39% with a loss in the first quarter, that its high growth story still holds. This is all for Business Buzz today. I am Louisa Asidi. Thank you for watching.